Good afternoon. This is Josh Mindlin at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert, Secrets to High Profit Option Strategies. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics. Chaikin Analytics is not registered as a broker-dealer or investment advisor either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. As a reminder, this webinar is being recorded and a copy will be sent to all registrants. Please submit your questions via the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. To get started, I'd like to play a brief video.
85% fundamental, 15% technical. And I created the model because self-directed investors didn't really have the tools and the discipline to successfully manage their own money.
And that's created by famous analyst and entrepreneur Marc Chaikin.
I'm a big fan of Marc Chaikin, though, so it makes me nervous, Scott, because I like his metrics of looking at the market.
Marc Chaikin.
Marc Chaikin.
An expert known on Wall Street for developing computerized stock selection models.
Joining us is Marc Chaikin. He is the founder of Chaikin Stock Research. Mr. Chaikin, welcome.
Thank you, Josh, and welcome everybody. We've got a really interesting webinar this afternoon because there's some very timely examples of stocks that were in the news and were big market movers today. But the general takeaway that I'd like you to have is that there is a disciplined, methodical way to trade options profitably, the way the experts do, like John Najarian, who we just saw on the video, who's embraced the power gauge rating. And we're going to share with you the secrets of high profit option strategy. The video really says it all. The reason is what we're going to share with you today has been embraced by some of the smartest, most successful people on Wall Street. But just to fill in the blanks, I've been on Wall Street for over 50 years. I've been using technical analysis for 45 years. That's one of the ways that I've survived 10 bear markets, but always in conjunction with fundamentals. For 5 years, I headed the options department of a regional brokerage firm called Tucker Anthony, 250 brokers, tens of thousands of options traders. And the one thing that was missing, even though we gave them great education, and back then it was all technical analysis, is they didn't understand the importance of a directional edge. And we're going to tell you what that means in a minute. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were clients and some of them were colleagues. The common thread was they were all successful, but they had different styles and different time horizons. I drew on everything I learned from these successful portfolio managers and traders in 2010 when I created the Chaikin Power Gauge rating. It's really the culmination of my life's work. It enabled me to go from technical analysis, and I know many of you know the Chaikin money flow and the Chaikin oscillator, to a much more powerful set of predictive tools. So in today's webinar, we're going to be talking about 5 keys to successful options trading. Finding the right stocks to trade on the long side or the short side with puts and calls, using the Chaikin Power Gauge rating to assess the fundamental potential of a stock, and our unique way to look at relative price strength to the market. That's that combination of fundamentals and technicals. We're going to show you a very special way to use Chaikin money flow which anticipates future price movement. I'm going to show you a few examples of that. It's not in any of the manuals or on the websites from the online brokerage firms or stockcharts.com that feature Chaikin money flow. We're going to zero in on rules-based entries and exits because that's really one of the absolute musts if you're going to be a successful options trader. I'm going to end the webinar by showing you how to play good defense, how to avoid landmines that can destroy your portfolios and your options trading, as well as your 401k plan, and then finally how to find probability-based options trades. Now, before we dive into that, unless you've been living in a bubble the last 6 months, you know that the stock market went from an uptrend on autopilot in 2017, where we didn't even have a 3% correction, to a roller coaster of a correction here in 2018. Volatility spiked up, then it dropped back down again, and yesterday we saw a big spike in volatility once again. Today pulled back a little bit as the market sort of went back to the upside. But to get a real picture of what's been happening in the market, I'd like to take a look at a one-year chart of the SPY. This is the most actively traded instrument in the US markets. As you know, it mirrors the S&P 500 large cap index. This is a one-year chart in Chaikin Analytics. A couple of things to notice. The uptrend is intact. We formed what's known as a W bottom after correcting more than 10% on a closing basis, and that's typically, as we'll see on the next slide, exactly what you should have expected. And in spite of this sell-off that we've had for the last 8 or 9 days, which reversed itself somewhat today, mostly headline-driven, tariff headlines have been whipsawing the market. The uptrend is clearly intact. Now, another thing we see here is that the S&P 500 did not make a new high in June, whereas, as we'll see in a minute, the small cap index, the Russell 2000 IWM, and the NASDAQ 100 did make new highs. But one of the key things to notice is Chaikin money flow. This measures institutional accumulation and distribution, looking back over 21 days. Institutions use the SPY the same way you and I do to get instant equity exposure. And on this rally, Chaikin money flow went from red, which reflected institutional selling, to green, and it stayed green as we've pulled back to an oversold yesterday. That's typically been very bullish on a short-term basis. The other thing we can see is that the large caps have been underperforming the small caps. How do we know that? Chaikin relative strength is red, not green. We're going to get into that in a much deeper way. So the bottom line is everything that we've experienced here in 2018 is almost scripted. So here we have a 5-year chart of the SPY, and you'll notice that we've labeled some of these bottoms as V's and some as W's. V-shaped bottom happens when you have a decline of between 5 and 10%. As we'll see on the next slide, typically over quickly, and that's why buy the dips is such a popular chant on CNBC. Now, when you get a correction, as I said, of 10% or more, you form a bottom in the shape of the letter W, meaning you have a sort of panic waterfall decline, you rally up a bit, you come back down and either make a new low or you test that low. We had 2 of them almost back to back in late 2015 and then again in early 2016. And then look what happened. The last V-shaped bottom was right before the presidential election in November of 2016. Then we went a whole year and 2 months without one. That spooked a lot of people. Everybody was waiting for a pullback. And the people who are on the sidelines with cash are not happy. And then when we got this sort of waterfall sell-off in late January, early February, people got scared. So it just shows you that market timing is very, very tough. I did it for 40 years for a living. I still write a weekly market letter where I have an overview of what's happening, but I try to be balanced about it and not look for shadows around the corner. So we've had a W bottom, which we should have anticipated, and this slide tells you why. We've had 75 declines since 1945, make that 76 now, of 5 to 10%. They average about 6%, and they're over quickly. And then the market recovers to a new high. The situation that we're in is the second line. 28 declines now of 10 to 20% in the S&P 500. Beyond 20%, we call that a bear market. This is called a correction. Now, the average correction is 13%. On a closing basis, the correction this time was 13.4%, so we're right on target. Average length of the decline, 4 months. The market peaked on January 26th. We're now into the 5th month of the decline. The good news is once the market recovers, it recovers to new highs within 3 months. Now, the NASDAQ 100 and the Russell 2000 IWM have recovered to new highs. So we're waiting for the S&P 500 to kick in. But if we look at the performance of the various market segments over the last 6 months, we see that small caps have been winning. The S&P 600 small cap, the ETF is IJR or SLY. Russell 2000, those are where the leadership has been, plus the NASDAQ 100. At the bottom, the Dow Jones, the S&P 500, down over 6 months as of last night's close. So small caps have been where the opportunities are, and this chart of the IWM shows you that. – IWM broke out in May above this minor downtrend line. It's holding the uptrend. Look at that Chaikin money flow. Big mountains of green, and small caps are outperforming large caps. How do we know that? Our relative strength indicator versus the SPY is green, telling you that small caps are outperforming. And again, they did that today. The key is they made new all-time highs. Part of the reason is fear of tariffs, which affect large cap multinational companies more than small cap, where the revenue is typically domestic. Nobody really knows, but money is starting to pile into the IWM. Now, if you're an options trader and you hear that the small caps are bullish, you might want to put on a bullish position. So using our options play ideas module, which is bundled into Chaikin Analytics, licensed from a very highly regarded company called Options Play, I looked at the IWM this morning, and although it circles in green the probability of this being a profitable position, it's only got a score of 100. Now, if we go back to the IWM, we see that it's just coming off an overbought. It needs a little more time to get oversold, but with Chaikin money flow as strong as it is, as soon as it does that, there'll be a buying opportunity. So my response to someone who wants to put on a bullish position in the IWM is not yet. Now, our scenario for 2018 is higher interest rates. We know that the Fed said they're going to raise at least one and perhaps two more times in 2018 and a couple more in 19, and rising earnings. That's a bullish scenario. When interest rates go up because earnings are strong and the economy is strong, that's bullish. You shouldn't be scared by higher interest rates. It spooked the market in late January, early February. Now it seems to be much less of an influence. So the market made new highs in small caps in the NASDAQ and rallied in the S&P, even though interest rates were going up. The key is second quarter earnings season begins in mid-July, and first quarter earnings season was a blowout to the upside, but we had a sell on the news mentality. If second quarter earnings come in as anticipated, up almost 20% year over year, people may take a different view. They may just buy into these strong earnings reports. We don't know yet, but I'm guessing that that's a strong possibility. So a very bullish scenario for 2018. Now, if in spite of all this, you think that the market is going lower and you're bearish on the large caps and the SPY because of potential tariff dislocations, you could put on a bearish vertical put spread. Options Play rates that at 191, so on a probability basis, it likes it. But as we saw, the SPY is now oversold. Do I want to put on a bearish position in an index with positive Chaikin money flow when it's oversold? The answer is no. I want to wait for a rally. We got the start of a rally today. If you're bearish, the risk-reward ratio, if the S&P drops 4.5% by August 3rd, when this option spread expires, buying the 271.50 put, selling the 260 put against it to reduce the cost, reduces the cost by almost 50% from buying the put outright. That's why we like vertical put and call spreads. Very good risk-reward ratio, but the timing isn't quite right. Now, we've already delved into a lot of information, and there's more to come, and that's one of the biggest problems we have as traders. Too much information. It's true in our personal lives with Twitter and Facebook and Snap and so forth and Instagram. It's even more so in our investing lives because you've got to focus to make money as a trader. That's particularly true in options. And all this information is a distraction. We call it information overload, and our solution to information overload, Chaikin Analytics for iPad and desktop. And we're going to be using examples from Chaikin Analytics to illustrate how you can become a better options trader. Underlying everything we're going to talk about is a concept that I've believed for 50 years. Fundamentals drive the market, but emotions drive the market to extremes. So the path to profits is to combine fundamentals with technicals to get the big picture as well as the emotional status of the technical indicators. Now, I said earlier that when I ran the options department at Tucker Anthony, 95% of options traders lost money. And the reason is, and I think it's still true today, sadly, they didn't understand the importance of having a directional edge. Now, what is a directional edge? Well, it's picking the stocks to trade calls or bullish vertical call spreads that are more likely to go up, and picking the stocks that are most likely to go down for your put trades. Sounds simple, but most people don't appreciate how important that is. They do random, out of the money, weekly put buying or call buying on stocks that are in the news where they don't really have that directional edge. So we give you that directional edge by combining fundamentals with technicals into a quantitative model that we call the Chaikin Power Gauge rating. That's what Jim Cramer and John Najarian were talking about on that video. And then we give you 6 pairs of buy and sell signals for better entries and exits. Now, you may have your own. You may use candle patterns or moving average crosses or breakouts. That's just fine as long as you have a discipline and use it over and over again. So the Chaikin Power Gauge rating is a very simple display. It looks sort of like the gas gauge on your car, but please don't confuse simple with simplistic. Under the surface, there's a lot of powerful number crunching going on, as you'll see on the next slide. I like to say that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. And during earnings season, which begins mid-July, it can be your GPS. It can guide you towards stocks that are likely to report positive earnings surprise and away from or into put positions on stocks that are likely to report negative earnings surprise because the Power Gauge rating is very bearish, not very bullish. Now, John Carter, who's maybe one of the best pure traders I've ever met and has been a partner of Chaikin Analytics, Simpler Trading, gave us this wonderful shout out. He said the Chaikin Power Gauge rating is an objective, awesome meter for stocks, combines 20 plus technical and fundamental factors to anticipate a stock's potential. Now, what got John so excited over 2 years ago about the Chaikin Power Gauge? Well, there are 4 primary factors that look at value, growth, technical, and sentiment inputs. And within each of those 4 primary factors, there are 5 sub-factors. This is what I learned from successful institutional money managers over a 30-year career selling them technical analysis tools. When I finalized the Power Gauge in September of 2010, froze the weights, froze the factors, nothing has changed. I realized that what I had done was model the behavior of successful institutional money managers. Some of them were value managers, the Mid-Atlantic region, Philadelphia, where I am now. Some of them were hedge funds in New York. They'd make money any way they could, but their time horizon was shorter. We had great growth managers in Boston, like Fidelity and Peter Lynch's Magellan Fund and so forth. But the common thread was that they all had a discipline. Whether they were looking at value factors like free cash flow to market or price to sales ratio or growth factors, whether they were short sellers or insiders, they all had a discipline that they followed. And the Chaikin Power Gauge rating has worked in the 7+ years that it's been live because it's based on how Wall Street works. It's not a theoretical model built by some newly minted PhD throwing what I call digital spaghetti on the wall. That's what got us in trouble in 2008, in 1998 before that, when long-term capital management blew up because a couple of Nobel Prize winners who really didn't understand the markets created a model. This model is based on how Wall Street works. Now, I've boxed 2 key indicators: earnings surprise, which is very critical going into earnings season, which leads analysts to raise or lower their estimates. Analyst earnings estimate revisions, the single biggest short-term driver of stock price movement. And then we have the long-term value factors, which are 35% of the model, and industry group relative strength. So important to have the industry group trend, the wind at your back, if you will. So when you add these 20 factors up, we call it the Power Gauge rating, and it's done a really wonderful job, not just of finding the stocks that are most likely to go up, but also telling you which stocks to avoid. Will we miss an occasional winner? Absolutely, but as you'll see, at the expense of avoiding some major losses. So how has the Power Gauge performed? Well, through the end of 2017, over an 18-year period, as I said, 7 of the years is out of sample. The rest was the back test. Very bullish stocks in the Russell 3000, up an average of 20% a year. Very bearish stocks, even after a 9-year bull market, up only 1%. It's that spread between very bullish and very bearish that's the difference between making money as an options trader, protecting your 401k plan, or losing money. Now, in 2015, it was really important to have a tool like the power gauge rating. And the reason was that the small cap stocks were in a bear market. Very bearish stocks in the Russell 3000 down over 17%. These were the fracking stocks, Range Resources, Pioneer, Kinder Morgan, the rails, anything that was moving liquid around. If you could avoid those stocks, sell them before they imploded, you really did yourself a favor. And of course, if you were trading them from the long side and bottom fishing, as we'll show you later, is not a good thing to be doing, in our opinion. You were really behind the 8 ball. You needed to focus on the stocks with very bullish ratings. Now, the most meaningful validation to me is the partnership we formed with NASDAQ 4 years ago. We created 3 NASDAQ Chaikin indices. They've got a 4-year plus real-time track record. These are buy and hold portfolios. And in order to get into these indices, Chaikin Power Gauge cannot be bearish. It has to be bullish. And then in February of 2017, New York Life's Index IQ ETF subsidiary, New York Life is the largest mutual insurance company in America, licensed all 3 of these indices. In May of 17, they launched Chaikin IQ small cap ETF, December large cap ETF. Combined, there's almost $1 billion in these 2 ETFs, and the power gauge rating is central to the construction of the indices underlying the ETFs. Now, this is not a recommendation, as Josh said, to buy these ETFs. This is just validation that the power gauge rating works not just for traders, but for identifying stocks that are likely to outperform over the next 6 to 12 months because the indices are rebalanced just once a year. It's like a buy and hold portfolio. So with that as a backdrop, let's look at a pyramid that encapsulates everything we believe here at Chaikin. It's a disciplined way to look at all the data, and especially in volatile markets, but almost all the time if you're an options trader, successful trading demands a disciplined methodology. So at the top of the pyramid, Chaikin Power Gauge rating, our go-to fundamental indicator that gives you that directional edge. And then industry group strength, which is the wind at your back. It points you in the right direction. At the bottom of the pyramid, just 2 technical indicators, Chaikin money flow and Chaikin relative strength. And we'll go into that in depth in a minute. And right there in the middle, the sweet spot for options traders, 6 pairs of buy and sell signals. The first pattern I want to share with you, we call classic Chaikin bulls. Really simple way to find the stocks to trade on the long side. Power gauge rating is bullish, meaning the fundamentals are strong. Stock is outperforming the market. And Chaikin money flow is strong, telling you that institutions are accumulating the stock. Now, we look at a chart, and here we're looking at a 1-year chart of Centene, which is a Medicare provider that's really figured out how to make money, even with government defunding of Medicaid in some places. We look at a chart differently than anyone else. We read it from the bottom up. Why? Because the power gauge is a ribbon at the bottom on this 1-year chart. Shows you that the fundamentals have been bullish for Centene based on that 20-factor model for the last year. That's your directional edge. Next, we look at the Chaikin relative strength. It's a heat map that goes from red to green and back again, but it's very smooth. It doesn't jump around a lot. So in this case, Centene was outperforming the market for most of 2017-18. So the market agrees with the model. This is really critical. No matter how good your fundamental research or your quantitative model is, whether it's Value Line or William O'Neill, Investors Business Daily, or Chaikin Power Gauge, if the market doesn't agree with you, guess who wins? Mr. Market always wins. Then we look at Chaikin money flow to see if the institutions are buying. In the case of Centene, they were buying back in August, September when the stock was 95 on the way to 130, and they're buying today. Now, in the left-hand corner is an interesting feature of Chaikin Analytics. The ability to create a note and attach it to the chart so that when you pull up the chart, you can always see what you were thinking along the way. Some of the best trading coaches in the world have said, keep a diary. Well, diaries are one thing, But if you can attach a note, in this case, I noted back in February that Centene was a potential takeover candidate along with Humana. On 326, it was selling off with the market. Then it gave that relative strength buy signal with the stock at about 105. And then when it hit the upper band, the upper volatility band, I'm thinking about taking my profits. The key is we looked at the chart from the bottom up. We didn't look at the price action until we'd established what the fundamentals and the relative performance were and whether the institutions were accumulating the stock. That's the total picture. It's all on one chart. At the top, you click on options, you get those options play ideas. We've got earnings alerts, the signals are there. One chart tells you everything you need to know to make an informed decision and trade options like an expert. Now, I could have screened for those classic bulls in the large cap space, which is typically what I've been showing on these webinars. But since we saw that the IWM and small caps in general are leading the market, I created this screen this morning. I started with small cap growth universe that we provide, 565 names. Required that the power gauge rating be very bullish, and I also wanted good free cash flow. I didn't want any of those sort of biotech stocks with no cash flow or no earnings. Then I had two technical criteria: above a rising long-term trend and relative strength, positive or strong. I narrowed 565 stocks down to 16. That's my watch list now for small cap buys. One of them was Crocs. And Crocs had just given a buy signal 2 days ago, what we call an oversold buy. You can see them on the screen. They work about 2/3 of the time. They're perfect for shorter term options trading or swing trading because the duration is typically 5 to 10 trading days. It's a trading signal. That's why it only works 2/3 of the time. Anybody who tells you they've got a system that works more than that on a short-term basis is someone you should run away from. But the bottom line is, methodically, I narrowed the small cap universe of growth stocks down to 16. One of them was Crocs. I look at the chart and I say, I want to be a buyer. And Crocs was up very nicely today as the market in small caps rallied. Now, it's also important to recognize classic Chaikin bears. Power gauge rating is bearish. What does that mean? Fundamentals are stacked against the company. Underperforming the market, so the market agrees with you. Chaikin money flow is red, not green, telling you that institutions are selling the stock. So here's a drug and biotech stock, and by the way, biotech has been doing much better lately, called Tesaro. But this stock in a bull market has gone from 135 all the way down to 38. Power gauge rating at the bottom, again, we read the chart from the bottom up, has been bearish. Underperforming the market, so the market agrees with the model, in this case on the downside, and institutions are selling. So you should be selling too whenever you get an excuse. And even though this stock has been a rumored takeover candidate, that's why it spiked up 4 days ago, the stock was still down 1.5% this morning. So until the power gauge or relative strength changes, I certainly don't want to buy the stock. It may be too late to sell it, but if you're following this disciplined methodology, you were selling it back here at 120, 130, even recently at 48 when it rallied on the way to 38. Classic Chaikin bear. Over and over and over again, even in a bull market, the power gauge has found stocks like this so you could make money on the downside. Imagine when the next bear market hits, and I don't know when that's going to be. If you've gotten comfortable making money on the downside in a bull market, imagine how confident you'll be handling a bear market. You're not going to be looking for those bottom fishing lows that sometimes work and sometimes don't. You're going to be looking for selling opportunities. So I'd like to cover 3 other patterns. We're going to condense 2 of them into one chart. We call them the dynamic duo, personality changes, and then the very special way to look at Chaikin money flow, which we call stealth accumulation and distribution. So what is the dynamic duo? It's just another way of saying combine fundamentals with technicals. Chaikin power gauge rating does the heavy lifting for you on the fundamentals. Who could possibly do that much research? Even if you had a master's in business, there's no time to do the research on 5,000 or 3,000 or 1,000 stocks. And then Chaikin relative strength to tell you whether the market agrees with the model and the stock's outperforming, because when they are both there, the dynamic duo helps find big winners on the upside and big losers on the downside, with one caveat. Relative strength stands alone as a bullish or bearish indicator. Now, what do we mean by that? Well, you're all familiar with the phrase momentum stocks. These are typically stocks where the fundamentals are very stretched, high valuations, Tesla, occasionally Amazon, the cloud computing stocks, 3D printing stocks in 2012, 13. They can go up for a long, long time, but when something changes, when there's competition, or in the case of Tesla, if there's been a death from a self-driving car, you're on a high wire without a safety net. So just be aware of that. You can trade these stocks from the long side using our relative strength buy and sell signals, in this case the buy signals, but be aware that you've got to use stops and not fall in love with it, because if you fall in love with a stock, you're not going to spot what we call personality changes. Personality changes, in my opinion, are the key to making and keeping profits. Too often as traders, we put our feet in cement. We fall in love with Tesla, the car, and then we fall in love with the stock. We like a semiconductor stock and don't see that there's been a divergence from a technical point of view, or the stock has just run its course. NVIDIA could be an example of that. So we define a bullish personality change, which we're seeing here at the bottom of this one-year chart in Macy's, as a stock that was underperforming the market. Now, our relative strength indicator looks back over 26 weeks. For those of you who are technicians, think of it as a stochastic of relative strength. So a stock has been underperforming the market like Macy's and then begins to outperform. Now, when the power gauge is bullish, you've got your dynamic duo. And do you want to buy that immediate breakout and change of personality? No. You want to wait for the first buy signal. Don't reach and pay up on a breakout or a personality change. And that first buy signal was what we call an oversold buy. It's a new 8-day low in a stock with a bullish power gauge rating that gets oversold. I owe this one to Larry Williams. He was also my long distance mentor when I created Chaikin Money Flow, using some of the research that he and Joe Granville did on accumulation distribution. Now, along the way, Macy's has been one of the outstanding retail stocks. It was up over 2.5% today. And there have been a series of oversold buy signals. Remember, they worked 2 out of 3 times. This one looks like it's working again, with the stock up close to the 38 level today. Chaikin Money Flow is strong. That supports the buy signal, although it's not part of it. Still outperforming, leading the retail sector, combining e-commerce and bricks and mortar retailers. Now, here's what a bearish personality change looks like. This is Philip Morris. Personality change happened at the left side of the chart back in August of 2017. And since that personality change, the stock has had a bearish power gauge rating. Remember, we read the chart from the bottom up, has been underperforming the market, and institutions continue to sell the stock. Now, my colleague Dan Russo, who's our chief market strategist and a really great technician, he's the head of the Chartered Market Technicians in New York, writes Morning Market Insights. He made Philip Morris his bearish stock of the day right here when we got an overbought sell signal. New 8-day high with a bearish power gauge rating. And then look what happened when they reported a disappointing quarter. Remember, I told you that the power gauge can be your GPS during earnings season. This is what I meant by that. And that was a wonderful trade. Stock dropped from 102 all the way to 80, almost in a straight line. Bearish personality changes, you need to respect them, because they tell you something has changed. Now, this special pattern of Chaikin Money Flow is really a secret sell signal that 95% of traders never see. We call it the Chaikin Bearish Money Flow Sell Alert. And we've been teaching this pattern to institutional investors for over 30 years. Chaikin Money Flow has been in the marketplace since 1982. Now available on every one of your online brokerage platforms, stockcharts.com, Reuters and Bloomberg if you're an advisor. But there's a unique pattern that we call a money flow sell alert. It happens when a stock makes or equals its previous peak, and Chaikin Money Flow, instead of going green as it normally would, stays red or negative. This is a chart of Advanced Auto Parts, one of the three biggest players in the auto parts business. And the chart ends in 2017. Bearish money flow sell alert came at a new all-time high above 170. Power gauge with neutral, that's your high momentum stock. It's your high wire without a safety net, bullish relative strength. But the institutions knew something and they were selling. Then you got a bearish personality change. Power gauge went bearish. So you had a weak dynamic duo, and the stock, that all came at about the 150 level. Relative strength sell signals along the way. This is the most powerful signal we have for options traders. What is a relative strength sell signal? Stock has been underperforming the market. Works even better when the power gauge is bearish as well. Rallies above its 21-day average and then drops back below. When it drops back below the 21-day average, triggers a relative strength sell signal. Now, why is this so powerful? Because these signals last 4 to 8 weeks, and they've been proven to be 70% accurate. The ultimate low on Advanced Auto Parts, 78.87. If you're following this discipline methodology, you could have gotten out of longs at 170, could have started looking for short sale or put buying opportunities from 150 on down. And anybody who was bottom fishing at 90 here on this gap down after earnings was disappointed because the ultimate low was 78. Now, this next slide is probably the most important slide in the presentation. I'm going to ask you to look over my shoulder, and it embodies the whole life cycle of a stock from bullish to neutral to bearish. And this stock was recommended as my bullish stock of the week on September 24th. D.R. Horton, really fine home builder, make first-time homes for first-time home buyers. And I recommended it at $36.90 in September. That's where I recommended it. So let me tell you why. So pretend you're looking over my shoulder. Reading the chart from the bottom up, power gauge was bullish. DHI was outperforming the market. So you had a bullish dynamic duo, and the institutions were heavy buyers. There had been a relative strength buy signal back here in August. When it pulled back to the 21-day average, I made it my bullish stock of the week. And it went almost straight up with money flow staying strong all the way to 50.5. Then it pulled back for a little bit, and it made a new high at around 52.50 in January. And look what happened to money flow. It stayed red, not green. That's your bearish money flow sell alert. Now it gets interesting because you had a bearish personality change just at about the time that Barron's was featuring the home builders. When this stock was trading at about 48, you had a bearish personality change with institutions selling. And just recently in the last month, the power gauges turned bearish. Now these are all relative strength sell signals, which work very well even with a neutral power gauge. So there's your whole cycle. Recommended it, had a great trade, or people who bought it in their 401k plans, $36.90 up to 52. Bearish money flow sell alert, and then the whole thing starts to unravel. And while small caps and the NASDAQ were making new highs and the S&P was rallying to 2,800, what was the end result for D.R. Horton? It went nowhere. Now, here's an example with a stock called Trimble of what we call the mini money flow sell alerts. These happen when you have a bearish power gauge rating in a stock that's underperforming the market, that gets overbought, doesn't necessarily make a new high or even get to the upper volatility band. This is our overbought sell signal. Again, my partner Dan Russo made Trimble his bearish stock of the day back here at 39. I made it my bearish stock of the week when it rallied up to 36 a couple of months ago. You've had 3 mini money flow sell alerts. Now, why do we call it a mini sell alert? A, because it wasn't making a new high. B, because money flow stayed negative on that nice rally from lower band to the 21-day average. And C, you made an 8-day high. So this pattern is really powerful. And you could have bought put options or done the vertical put spread, which we favor, on any of those signals. Now, everything we've been looking at is what Warren Buffett calls the fat pitch. We call it the ideal setup. Warren Buffett has famously said they don't call balls and strikes on Wall Street, so you don't have to swing at every pitch. You can wait for your pitch. We call it the ideal setup, and what's been missing? It's the 6 pairs of buy and sell signals. Warren Buffett doesn't use technical signals. We think they're critical to successful options trading. Now, in order to help you zero in on these, we have a dashboard in our iPad product and on our desktop product that highlights the stocks that have given you buy and sell signals and power gauge changes in any list, index, ETF in the system. We encourage everybody to keep a list of focus stocks that we call My Stocks. So for a webinar that I did in April, in the stocks that I follow, I had 4 or 5 stocks that gave buy signals, including Apple and Marathon Petroleum. And then Adobe, we gave a relative strength buy signal at 225. That's where the signal came. And the takeaway is to trade more profitably, follow the signals. A disciplined approach based on proven, tested, rule-based methodology for entries is better than trading on your emotions. Now, people like this so much and found this to be so profitable that they asked us to push these alerts to them. They didn't want to have to dig into the system. So on April 7th, we launched our daily email alerts. So for 2 different lists, one, your My Stocks list, and then for a broader market average, we push those signals to you in an email that comes out around 8 o'clock every morning. The second day this service was live, I got 2 alerts on a stock, EVHC in the healthcare business, oversold buy at 36.90, and then I saw why. They had reported a positive earnings surprise. They beat analyst estimates. So this is what happened to Envision Healthcare. There's your buy signal. You actually had to pay up 40 cents, 39.30, and then 2 days later, Kohlberg Kravis announced that they were going to make a bid to take the company private, and it spiked up all the way to 43. So this is sort of opportunity meeting a disciplined methodology. This happened the second day the service was in force. Today, I got this email based on My Stocks list. One stock, Citrix, oversold by 104.46. This is a software stock that's been very, very strong. Chipotle, the rating turned bullish again, earnings estimate revisions. But the key is very focused, comes in your email. That's how you find winning trades. Now, I'd like to show you a couple of examples since we identified the fact that IWM and small caps were outperforming the market, of how you find winning trades in small cap stocks, because a winning trade in a small cap stock can be almost as rewarding as an options trade. And very often these stocks do have options. So first and foremost, follow the power gauge rating. Make sure the industry group supports the trade. We're favoring small caps and we want to use a rules-based entry. So here's Fossil. This was a watch company, designer watches, that was really out of favor after a big run-up in 2015-16. Then you got the bullish personality change back here in January, February. Stock spiked up on an earnings surprise to the upside. Do I want to buy the spike? No. I want to wait for the first buy signal. There's your oversold buy. It came at around 12.50, and the stock rallied all the way to 29. Small cap buy signal where everything was in place. Power gauge, relative strength, the signal. This is how you find winning trades. Lucora, it's a stock that we featured on our webinars a year ago. Went into a little bit of a sideways consolidation for 6 months, but look at the money flow. Smart money was buying it. Power gauge was bullish. You got a bullish personality change, started outperforming the market. Right here, do you want to buy that? No, wait for a buy signal. Disciplined entries. Again, oversold buy signal, new 8-day low. Then you got another one a couple of days ago. Very powerful entries when everything is lined up. Warren Buffett's fat pitch. Now, I want to end the webinar by talking about good defense, because good defense can lead to good offense. We're here in Philadelphia. The Eagles finally did it, and it was based on the defense. Yes, there was a trick play from the quarterback as the receiver on a touchdown, but it's the defense that won the day at the end of the game. So how do you play good defense? Well, Herb Greenberg, who used to write for TheStreet.com and for CNBC, actually penned an article in January of 14 where he said it's the stocks you don't own that matter. What he was saying is it's not finding the big winners, it's avoiding the losers. It's applicable to the options market as well. It's the trades you don't take that matter. Being disciplined about the trades, being selective. So how do you play good defense and avoid the stocks you shouldn't own? Well, you avoid weak industry groups and stocks in those groups. You know what stocks not to buy, and you don't bottom fish. You improve your performance by eliminating bearish rated stocks from your 401k plan and taking them off your buy list. You spot bearish personality changes so you don't have your feet in cement. And you use bearish put spreads on weak stocks to make money on the downside in bull and bear markets. So here's an example of a stock you didn't want to own in 2017 and 18. Ambarella semiconductor stock. Power gauge rating was bearish. You had a bearish personality change, plenty of institutional selling. And again, my colleague Dan Russo, and you'll understand that you might have access to Dan Russo in a special offer we're going to do at the end of the webinar, and me, put out a sell signal. He made Ambarella his bearish stock of the week when it rallied up here and gave an overbought sell signal at around $54. And negative earnings surprise, the stock spikes down to 42. Now, if semiconductors are weak, and we know that because we see the weak label there in the upper right, that probably means that the biggest stock in the group, Intel, is going to be weak at some point. Well, Intel had a bullish rating while that was going on. And it had a really nice uptrend line that was broken back here about 2.5 weeks ago. Using that note capability, I noted all the bullish turns in Intel, but then on 6/18, I noticed that the Chaikin power gauge had gone bearish on Intel's. Now I want to sell the rallies. If I'm long Intel, time to get out. Now, just this morning, one of the top technology analysts on Wall Street at Bernstein and Company made Intel a sell. Very rare, as you know, for Wall Street analysts to put out a sell rating on a big stock. If you were following the power gauge methodology, you were already bearish on Intel at 53 on June 18th. If you waited to learn about it on CNBC, because unless you're an advisor, Bernstein is probably not a resource at your disposal, you had to wait to sell it at 49.69. So Chaikin Power Gauge gave you a jump on one of the smartest technology analysts on Wall Street. And it does that because analysts' estimate changes and opinion changes are part of the power gauge rating, one of those 20 factors. Now, if you're bearish on Intel, you might want to consider buying a put option, or we think higher probability bearish vertical put spread. You buy the 50 put, you sell the 45 put against it, you reduce your cost by 25%. Options Play likes it, they circle it in green. If Intel drops about 9% to 45 by August 3rd expiration, you make a 228% profit on a 9% drop. Personally, I'd wait for a little bit of a rally, but very often when an analyst turns bearish, you don't get a rally. So you might want to put this on as a low-risk way to be short Intel for the next 6 weeks. That's the power of discipline in stock selection and discipline in option strategy. We avoid the strategies that are low probability options trades, focus on the high probability trades. Now, I said earlier that I hate bottom fishing, and when I did a live event with Jim Cramer, I was quoted as saying bottom fishing is the most expensive sport in America. So let's have a little bit of fun. At the bottom of this slide are the critical indicators that we've been talking about on this webinar. Anybody know what this stock is, which was underperforming the market for almost 2 years, where the power gauge has just turned bullish? Well, if you guessed General Electric, you were right. Power gauge was neutral, but it was underperforming the market for almost 2 years with huge institutional selling. Anytime you got a relative strength sell signal, you had a 4 to 8 week trade, very profitable. But look what happened about 6 or 7 weeks ago. The power gauge turned bullish. Still underperforming the market. Analysts haven't bought into it, but they bought into it today. When I did this chart, GE was up 9%, its best day in, I think, 4 years or 5 years. Finished the day up almost 8% because they announced the details of their restructuring plan and the market liked it. The key is the power gauge turned bullish. Do I want to buy the stock here? Not if I'm a bottom fisher, but as soon as I see that relative strength kick in, I want to buy the first signal. Discipline, methodology, but the power gauge caught on to this by analyzing those 20 factors. Now, we actually have the Benziga folks from Detroit visiting us tomorrow in Philadelphia. In May of 17, we won the Benziga FinTech Award in New York for Best Ideas Platform. 19 other entrants into that category. And this year, we were best in show. Now, what did we win that for? We won that award for something we call our stock discovery engine. It finds stocks that are similar to a stock that you input. So if you like a stock like Chipotle, where the power gauge rating had just turned bullish, you put it into the discovery engine and immediately it'll look for other fast food stocks with bullish ratings. Now, a week and a half ago when I did this, Brinker, EAT, was the only fast food stock with a bullish rating. It also finds bearish stocks, which become potential swap candidates. So when I did this for my weekly market letter and then repeated it on a webinar 2 days later, Starbucks and Yum Brands both showed up as short sale candidates with bearish ratings in the fast food business. So the recommendation was sell Starbucks at 56.60 and swap into Chipotle at 4.53. That was my weekly swap recommendation in my market insights. Also used it on a webinar 2 days later. Let's look what happened. Starbucks dropped from 56.60 all the way to 50. It was making new lows today because of a negative forecast about their same store sales. If all you did was sell Starbucks at 56.60, you're happy. But if you swapped into Chipotle, you're really happy because Chipotle went up 4%. So you're swapping out of something that dropped 12% into something that's up 4% that's likely to persist. At one point today, Chipotle was up over 10 points, 2.5%, finished up about 7.88. The key being you could have also bought a bearish put spread on Starbucks, very cheap way to trade the downside. And that was a very profitable trade almost overnight. So the swaps engine is very powerful. Now, all of this is what we call Chaikin Analytics. It's a proven stock selection system, and it now gives options traders an edge by pointing you to the right stocks and providing the options play probability ideas on any stock that you want to look at. Normally, Chaikin Analytics is $2,195 for an annual subscription. You can go to our website, chaikinanalytics.com/expert. We've got all of our customer success and salespeople standing by to answer any questions if you want to call in, and I'll give you the number in a minute. But as a webinar special, we'd like to take $200 off the price, reducing it to $19.95 a year. You can call in at 877-697-6783 if you have any questions, or just go to the website and subscribe. And with Chaikin Analytics, you get the 20-factor model, the power gauge rating. You get the discovery engine for new ideas and swap ideas. You get the screener that we use to generate the small cap list, our options play ideas, intraday charts, earnings alerts, and my weekly market insights. So it's a complete package, all for that one price, $19.95. Plus, as a member of the Chaikin community, you get access to Dan Russo's weekly strategy webinar with Josh Minlin providing the options ideas. Member only access once a week on Monday after the close. Unlimited coaching. If you need it, it can be one-on-one coaching. And Dan Russo's daily morning insights. And I've showed you some of the short ideas that have come out of that that have really been powerful. So as a fast action bonus, an inducement to subscribe by midnight tonight, like to take another $200 off the price, reducing it to $1,795. Plus, anybody who subscribes by midnight tonight gets a one-on-one telephone session, usually lasts about a half hour, with either me or Dan Russo. And if it were me, I'd pick Dan Russo because he's one of the best technicians I know, but I've been doing these for a year and a half now, and they're very rewarding. So the number is on the screen. Call it if you have any questions. Josh Minlin is putting the link to the subscription page in your chat box. And with that, I'd like to thank you all and turn it back over to Josh to wind down the webinar.
Thank you, Mark. In your chat window right now is a link to take advantage of our offer. You can use that link. The discount code will automatically be applied, or you can call us at 877-697-6783. Call now, get that one-on-one with Mark. That's an incredible value. We can have you on an onboard session tomorrow, have you up and running on the platform. We have an option ideas session every twice a week, which I run. We can help you whether you're just starting out or an advanced options trader. We have the tools for you. Again, that number is 877-697-6783, or you can click the link inside of your chat window. The discount offer will automatically be applied. Thank you, everybody, for attending, and I look forward to seeing you in one of our future members-only sessions.